Hi guys, a very good morning. Uh, Today, I think we were in chapter 2, right? So today we will complete chapter 2 and move to the third chapter. Okay. So again, the first 10 minutes is where we ask questions. We have Kunal has joined. Yes. So these are the things that we have covered till date, right? In the first class, we covered 19 topics. So these are the how many 19 topics we looked at on the first day. Okay, the current tax system, progressive, regressive, and all that. Okay, so when it comes to the sources of tax, Aditya, can you tell me a little about the sources of tax? Statute law. The law, basically the law. Okay, then case law. These are the previous court decisions that were taken based on which laws are made. These are basically the decisions that were taken in the previous court cases. Okay. Then internal HMRC manuals. These are manuals which are used for the HMRC staff. That is also available to the public. Leaflets, booklets, which are HMRC guidelines, which are in non-technical terms. Then technical guidelines, the leaflets and booklets are aimed for layman, they are layman terms and for public. Whereas the technical guidelines is for tax advisors and tax experts, they are very much technical terms. Okay, fine, that's fine. Now I think I would want everybody again till 10:10. Okay, this first chapter has no numbers. Moving to the second chapter. Check if all of you are able to do test your understanding one. Pooja, is this your first class you are attending? I don't remember seeing your name before. Have you attended an online class before? Oh, this is your first class. Did you watch the recordings? No, please make sure the recordings are uploaded on the LMS. Make sure you watch it. It is mentioned in the group. Just check that you have access to the link. Join that. Anyway, again, first 10 minutes is basically this is our schedule. This is our plan. This is what we follow. Okay, 10 a.m. to 10:10. We recap. I ask you questions. I ask you to do old questions. 10:10, I start the first class. Okay, so Ellie received employment income of 125. She also made gift aid donations of 16,000. So what do you do? Again, she has an income of 125,000. Okay, and she made gift aid donations of 16,000. So in this case, what do you do? How will we calculate her taxable income? Let's see who gets the answer first. Again, I did tell you how the personal allowance could be adjusted. Just a quick recap. Personal allowance is gradually reduced for individuals with an income of 100,000 or plus. How? The reduction of personal allowance is based on the taxpayer's ANI, adjusted net income. Net income minus gift aid donations minus personal pension contributions, you get the adjusted net income. If I have to solve this question for you, where is it? Ellie, how many of you got the answer? I don't know. Okay, let me check. I have about 2 minutes. So Ellie has an income of 125,000, right? Here, what is happening is, again, her employment income is 125,000, and normally the personal allowance normally will be 12,570, which is fixed. But in this case, what happens, because her income exceeds 100,000, there is a certain separate calculation that you will make, right? What is the calculation you will make? You will calculate the adjusted net income. How will you calculate the adjusted net income? She has an income of 125,000. You see here, there is a net income of 125,000. Employment income in her case is 125,000, from which you are deducting what? The gift aid donations, right? So her gift aid donations are 16,000 to get the adjusted net income. So how much is her adjusted net income? How much? 109,000. Basically 125 minus 16,000, 109,000. Right? Now that you've got the adjusted net income, for any amount above 100,000, what do you do? The excess over 100,000. How much is the excess over 100,000? Because again, Pooja, if your income is more than 100,000, if your adjusted net income is more than 100,000, for that excess, yes, there will be a reduction in the personal allowance. So excess over 100,000 in your ANI is how much? 9,000. Kunal, I hope you are understanding. Over above 100,000, there is 101, 2, 3, 4, 5, 6, 7, 8, 9,000 is the excess. This excess will fall by, or there will be a 50% reduction in this excess. So how much is 50% of 9,000? So again, go back here. The excess is 9,000, where the taxpayer's ENI exceeds 100,000, the personal allowance is reduced by 50% of that. So 50% of 9,000 will be 4,500. So what happens? The personal allowance is reduced by 4,500. So how much will the personal allowance become? Normally, the personal allowance is 12,570 minus 4,500 is how much? 8,070. Correct? So her personal allowance becomes 8,070. So Ellie has an income of 125,000, from which there is what? Because of this gift aid donations. Again, we will see about gift aid donations today, right? And in chapter 6. Personal contributions we'll see in chapter 6. Today we'll see gift aid donations. What happens is the personal allowance, it's like instead of 12,570, now your personal allowance is 4,000. Sorry, where is it? 8,070, correct. So your personal allowance is 8,070. So what happens to your answer? What does your answer become? How much? Yes, that's what I don't want to sit and do calculations. 16,000, 116,930. Taxable income is 116,930. Is that the answer? You got that answer? Test your understanding. 116,930. I hope nobody has problems with this, right? Okay, everybody comfortable and clear? Anyway, it's 10:12, meaning that I will start the class for the day. And there were a few topics from the second chapter. In fact, a lot of topics in the second chapter we have completed. I'm just going to go through. We saw what is the tax year. Okay. We saw what personal allowance is, 12,570. We saw married couples and civil partners, children. We saw the taxable pro forma. We saw all the types of income, savings, non-savings. I think we saw that in the first day itself. Yes. Then we saw personal allowance. How much is it? 12,570. See here. If the personal allowance crosses 100,000, then there is a reduction in the personal allowance. We just did a sum on that. Okay, so quite a lot of topics were over. So it's not like I'm just starting this chapter now. Income tax liability, I told you, up to 37,700, you will pay a percentage of 20% in tax. If your income crosses 37,700 up to 125,140, you will pay 40% tax. And above that, you will pay 45%. So this is something that we have already seen. And the order also we have seen. The income tax liability is calculated on income in a strict order: non-savings income, savings income, dividend income. And we saw that also. Okay. Order of deduction. Income tax liability. Tala's example I saw. You remember? Tala has a trading income of 43,000 and an employment income of 7,000. So Tala's total income is just 50,765. So Pooja, you don't have to do the calculation which we did just now. You don't have to calculate the adjusted net income here. Why? Because the income is less than 100,000. So you simply deduct 12,570 to get the taxable income as 38,195. Basic rate, again, up to 37,700, you pay 20% in taxes to the government. So you will pay 7,540. And anything above that, look at this, Pooja, out of 38,195, Tala has already paid tax for 37,700. So what is the remaining? The remaining is 495. Basically, 38,195 minus 37,700 is 495. For that, you will pay the next tax rate, the higher tax rate. How much is it? 40%. So 40% into 495 is 198. You will finally get the income tax liability. Again, in this question, here our income has crossed 135,000. Our income has crossed 135,000 and employment income of 33,360. So we have a total income of 168,680. Right? So now what do you do? Your income has crossed 100,000. So again, there will be an adjustment in the personal allowance. But in this case, again, your income has crossed, because you do the calculation, you will see that 50% reduction will amount to 0. Okay, so personal allowance is 0. So taxable income becomes your entire amount of 168,680. 168,680. Yes. So in this case, think about it, guys. I can do the calculation, but 168,680. There is how much excess? There is an excess of 68,680. 68,680. Correct? For this 68,680, personal allowance is 0, yes. For this 68,680, again, we will reduce the personal allowance by 50%. So 50% of 68,680 will be 34,340, which is anyway more than the personal allowance. So in this case, personal allowance will drop to 0. Now your income is 168,000. Total taxable income is 168,680. And each of the rates, that is up to 37,700, you will tax at 20%. 37,800, 37,700 to 125,140, the amount that is there. How much is the difference? That much amount you will pay at 40%, and anything above 125,140, you will pay at 45%. So your tax liability becomes 62,109. Okay, so is everybody comfortable with all this? Nobody has any problems. Every Abdullah's example, we saw marriage allowance also. Offline, comfortable. Kunal is comfortable. Chirag, you are comfortable with all this? We saw Katie and Emily's example. Test your understanding 3 also we saw in the previous class. Okay. Now, income tax. Here, what is happening is, again, we saw pay as you earn. What is pay as you earn? This is basically where ensure you are on mute unless you want to speak to me. You basically have to pay tax. Correct? But your boss, he deducts the tax and gives you your money. Your employer deducts the tax and pays you the money after tax. Anyway, pays you the money. So in this case, what happens is your money has already been deducted. Sorry, your tax has already been deducted. So employment income is received by individual after income tax has been deducted, right? So that's why what happens is from the income tax liability, see, it's like this. I can give you a small example. Say you go to a restaurant. Okay, and when you go to a restaurant, the bill is 5,000 rupees, right? So obviously, when the waiter comes and gives you the bill, he will give you a bill of 5,000 rupees. But your friend already paid 2,000 in that. You know, he went up, he had a meeting, so he got up and he left earlier. But in that, he paid 2,000. He paid to the waiter beforehand itself 2,000 he paid. So in the end, what will happen? Your income tax, your bill will still be for 5,000. You will get a bill is still for 5,000, but because 2,000 has already been paid, right? That amount paid is deducted. And you will say, how much is the balance that you have to pay? How much is the remaining that is payable? The remaining payable is 3,000, and that is all that you are looking at. As simple as that. So you just need two things to understand this. One, you need to understand that when you are getting employment income, the employer is already deducting your income tax. And that is why when you show the income tax computation, you will obviously show everything, the entire liability that was payable. But from the entire liability, because we know that a certain amount has already been deducted, the payable is only the balance. So again, in order to understand income tax payable and in order to understand pay as you go, sorry, pay as you earn, right? In order to understand pay as you earn, 2 things are needed, 2 ingredients are needed. Ingredient 1, you need to understand that certain employees receive income after income tax is deducted. So the employer deducts this, and this is known as pay as you earn system, where the employer deducts your tax liability and pays it a part of your tax liability, pays it on behalf of you to the HMRC. Okay, that is the first thing you need to know. Then the second thing, when you're doing your income tax computation, you have your tax liability, you will show the entire tax liability, whatever it is. Say, okay, it is 10,000 is my tax liability, but in that, already a certain amount has been deducted. So, pay as you earn has already been deducted. So, your payable, the remaining that you have to pay to the HMRC, your tax payable is the balance 8,000. So if you know these two things, if you understand, income tax payable is done. First is this, which I have highlighted, and the second is this, which I have put in red. If you know these two things, you know how to calculate income tax payable from income tax liability, and you know what is pay as you earn also. So you don't need to worry, oh, what is there in this paragraph? It's very simple, right? Pooja, I hope this is clear for you. I'm just quickly recapping on a few topics that we looked at already. So, for example, Akram had an income of 41,870 and employment income of 12,240 as per the information. He does not have any other income, and already 80 was already deducted. So Akram has a total income of 54,120. Remember, his income is less than 100,000, so no adjustment is needed to the personal allowance. Personal allowance will be 12,570 itself. So his taxable income is 41,550. Right? Now, as usual, up to 37,700, you will tax him at 20%. 20%. So he's paying 7,540, and anything in excess of that 3850, he will be taxed at 40%. So he will have a tax liability of 1540. So his total tax liability is 9080, but from the tax liability you are deducting the pay as you earn. I always go with pay as you earn, right? So his tax liability is 9080, his pay as you earn already that was deducted was 80. So we know that the remaining amount that he needs to pay is only 9,000. Okay. Uh, who's this? Pooja, clear on pay as you earn? Is there problems? Do we have issues? Yes. Next, we look at reliefs against total income. What do I mean by reliefs against total income? This is not something that we had seen. This is not something that we had looked at, right? So reliefs against total income, this I will put in the index for pay. Pay is what? 27th. Now again, a lot of this we will look at shortly in later chapters also. But what do I mean by a relief? Say you have a certain loss. The government itself will give you a little bit of relaxation on the tax that you need to pay, right? Or say, for example, you have made a donation. Remember, we said the government The UK tax system encourages donations. So, what we need to know here is, again, whenever you there is certain things like, for example, a donation made, which we will look at shortly, charitable giving, right? See, a relief is available for charitable giving, right? So whenever these few things are done, you get a relief on the tax that needs to be paid. That is what is relief against total income. Basically, meaning that from your total income, you will deduct an amount. You will get a relief on a certain amount, and only the remaining will be liable to tax. Are you understanding, all of you? Sneha, clear? You look a little lost. Clear? Sure. Just make a note. What is a relief against a total income? This is where the government allows you to reduce your total income before calculating the tax payable. So you're getting a relief, you're getting like a relaxation. So you get a relaxation on the tax paid, and therefore, this is a tax relief. For example, again, so that's all that is there in this page. That is all is there. So if you know this much, you know and you are comfortable with what is reliefs against total income. You already know this. Okay. So the government is allowing you to reduce your total income before calculating tax. Government is allowing you to reduce your total income before calculating tax. Now you get a relief when you get a relief you get a relief when or if you paid interest on certain types of loans, right? Or you get a relief when you suffered a business loss. Now, again, what is this certain types of loans? I'm highlighting that in blue. If for business, see, if you take a loan to get married, that is not something where the government will say, oh, we'll come and give you a relief, right? Remember, the government encourages, we saw this, the tax system, the UK tax system encourages business, encourages entrepreneurship. We saw this in the first class, first chapter. You remember or no? You remember, right? So here, if you borrow specifically for work related things, for business, if you take a loan, that on that loan you will get a relief, not for personal loans, right? So before I move ahead further, let's just look at this. Okay. No need to write. I'll give you time to write. Forget Anwar and Mila's story. We will do the calculation later. But tell me who will get a relief, Anwar or Mila? Anwar made interest payments. So Anwar also paid interest. That is, Anwar also had a loan. And Mila also paid interest, meaning Mila also had a loan. Who will get the relief? Online, what do you say? Who will get the relief? Mila, yes, I don't want question mark. Mila, question mark. No, you should be confident. Mila will get the relief, right? So the ones who are out of Chennai, again, make sure that you are clear and comfortable, right? So that's it. So going back to qualifying interest payments, we need to know that for specific types of loans, you will get this relief. Again, if you take a loan for specific business or work related purposes, the interest you pay on that loan can reduce your total income. Basically, you get a relief. That's it. With that, now we will be able to do the thumb. That's it. If you know this much, you are good to go. Your life is good. Life is easy, life is good. Can we now look at the sum? Anwar and Mila each have total income of 54,000. Okay. Of which, none of which is savings or dividend income. They made the following payments during the tax year. Calculate their income tax liability. Now, I'll not look at the answer. Let me try to do it on my own. And let's see if we get the right answer. And I need your help. Okay. Anwar will do first. Anwar has an income of 54,000. Okay. Now, obviously, Anwar has an income of 54,000, and you need to understand and know that Anwar is paying interest on what? On his personal loan for his own house. So, Anwar will not get any relief. Are you understanding? So Anwar, as usual, will be his personal allowance will not be affected. Anwar has a personal allowance of 12,570. If you want, Aditya, you can always come in front. There's a problem with because I want to show my textbook also simultaneously. Max, I can zoom in a little bit. 12,570. Right? So, how much is his taxable income? Quick calculations I need. 430. And you know that up to 37,700, we will tax at 20%, which should be how much? 7,540. Now, you don't need to always keep going back to the calculator. You know, 20% of 37,700 is 7,540. And the excess of that is how much? Again, sorry? I'm just going by what you're saying. Okay, 3,730. For this, what is the tax rate? 40%. So 3,730 into 40% is 1,492. Okay, so his tax liability will be 7,540 plus 1,492. 9,032. So I got for Anwar. Anwar's tax liability is 9,032. Now again, there is no pay as you earn here. So no need to worry about that part. But if he had pay as you earn, You will deduct that to get the tax payer. Now I will do Mila. Mila also has the same income. So basically, Mila also is technically supposed to have the same liability, but Mila has a loan. And Mila's loan is a business related loan, right? Because Mila has a business related loan, Mila will get a relief. So remember, what did I tell you? What is a relief? Again, the loan amount that is paid, the interest paid on the loan is deducted from the total income to get the taxable income. Right? So from 54,000, Mila is getting a relief of 2,000, and that is the only difference between Mila and I. So Mila basically has done a smart thing by taking a business loan. So Mila's income will now be total income will now be seen as 52,000, from which, as usual, she will have a personal allowance also of 12,570. Therefore, her taxable income will become how much? 40. This shouldn't it be 43,430? 39,430, correct. 39,430. Now on this, up to 37,700, there will be 20%, which is again 7,540. And anything in excess of that, I think this is 2,000, 1,000 something. 1,730. Again, we will pay 40% on that, which is 692. Therefore, Mila's taxable, tax liability is how much? 7,540 plus 692, 8,232. So as you can see, Mila's tax liability is 8,232 versus Anwar's tax liability was 9,032. So as you can see, even though they're earning the same amount and even though they're paying the same amount of interest, Anwar has a higher tax liability compared to Mila. So again, these are all ways of bringing down your tax liability. Obviously, this is not illegal, right? So this is an example of avoidance, tax avoidance. So again, these are all interesting things to kind of bring down your tax liability. So Mila is a smart lady who is paying lesser taxes than Anwar, even though she earns the same amount, even though she is paying the same amount of interest. And is our answer right? That is the most important question. 9,032 and 8,232. Right? With which we are sorted. Now let's look at test your understanding 5. Guys, the reason I want to do all these calculations is again because people with in tax, there's not much to explain as such. I just told you, you deduct the interest, that's it. Now there may be 10 calculations to do, right? So explanation wise, logic wise, one of you has done AA with me, FM with me. So there was quite a lot to give analogies, give examples, tell stories. But in tax, it's just a rule. There's a number, apply that in the sum. So that's why, unfortunately or fortunately, I would have to definitely try as many test your understandings and illustrations so that you get enough practice. Right. So 27th of March, we've looked at what till date? We've looked at reliefs. I think we started from reliefs, right? We looked at qualifying interest payments, which is again part of reliefs. I mean, you get a relief on qualifying interest payments, not on all interest payments. Only some interest payments qualify for the relief. Which are those interest payments? Interest payments that are taken for loans that are related to business or related to work. Then we looked at illustration 8. Then now we're looking at test your understanding 5. Test your understanding 5. Right? Again, I will do the calculation. The manual provides the following information in respect of the tax year: trading income 26,000, employment income 29,950, qualifying interest payment is 4,000. He notifies you that payee suffered, yes. So this is an interesting question, right? So what is happening is calculate his income tax payable. Okay, all of you look at the screen. His total income is going to be 26,000 plus 29,950, which is 55,950. Right? So his total income is 55,950. Now, on this, did he pay any qualifying interest payment? Yes. Remember, guys, all of you, 1 second, look at the screen. In the previous question, the wordings used was Anwar paid interest, Mila paid interest. So you had to find out which payment qualifies for a relief. Mila's payment qualified, Anwar's payment did not qualify. But in this question, the question has clearly mentioned that the interest payment is qualifying, meaning that it is qualified for a relief. So you don't need to break your head too much, right? So you get a relief of 4,000. Therefore, how much is the remaining 51,950? Right? 51,950. On this, poor Emmanuel will have what? A personal allowance. Now, again, there is no need for an adjustment in personal allowance because his income is less than 100,000. Therefore, what happens is his personal allowance remains at 12,570, and therefore his taxable income becomes how much? Just check with the calculations properly. 39,380. So his taxable income has become 39,380. Up to 37,700, this man will pay 20%, which is 7,540. And above and beyond that, how much is it? 1,680. This man will pay 40% of 1,680, which is 672. Therefore, his tax liability will be 8 to correct. So his tax liability is 8,202. But remember, he has already a bit of his tax liability was already deducted by his employer. See, he has an employment income of 29,950, and out of that, 3,620 was already deducted. It's like the friend out of the bill of 8,212 has already paid 3,620. So pay as you earn is 3,620 already paid. Therefore, now the bill that you will pay or your tax payable will be 4,092. So now the important question is to check the answer. Right? Sometimes, even if you are a faculty, you might forget a point, you might forget a step. I haven't checked the answer. So let's just hope for the best. Test your understanding. 5. 4,592. Yes. 4,592 is the tax payable, and the tax liability was 8,212. So our life is easy. So test your understanding 5 has also been completed. Okay. So my in-pay donations won't affect my personal allowance unless my adjusted net We are coming to that question. We'll do a question. Test your understanding. 7. Gifted donation, how it will affect your personal allowance and how we will calculate the adjusted net income is something we will do in Test Your Understanding 7. Next is charitable giving. Now, again, remember charitable giving also. When you give in charities, this is something the government encourages, right? And taxpayers who make the reason why I'm telling you that this is coming is not that this is what we're looking at now, donations and how. So just give me 5 minutes. Once we are comfortable with this, we will answer your doubt, right? So again, life has been complexed. People have made things difficult for you. Remember one thing, that whenever you give charity, all you need to know, no need to look at the textbook for now, but whenever you give charity, the system itself, the UK system of tax itself, the UK system itself encourages that. They are happy that people are paying charities because obviously maybe poverty will come down, maybe poor people will be helped out. So giving charities is a good thing. They are encouraging that. And when that happens, the government and the tax system gives you a relief. They tell you, oh, hey, you did a good job, right? So we are giving you this relief. How and what? See, if you are, say, making a donation of $100, right? If you want to make a donation of $100, you go to a charity and say, oh, I want to pay $100 to you. What the government will do is, oh, you want to pay $100, right? From your side, from your end, you only shell out, you only pay 80. The government is saying the remaining $20 is something that we will pay. So you've given, so it's a win-win situation to you also and to the charity also. You wanted to give 100, charity was supposed to get 100, charity gets 100. But why is it a win-win situation? Why is it good for you? Is because you wanted to give 100, but you're giving only 80. So it's like you're getting a discount on the charity that you were giving. So the government pays the remaining $20. And this is how the government is kind of encouraging the system itself, the UK tax system itself is encouraging giving donations. First, you write this much. Let's not complicate our life. Okay, I hope this is clear. Again, no need to look at the textbook. So, at the time of payment of charity, you are everybody, you are already getting a 20% relief. Why did I say 20% relief you are already getting? Because you wanted to pay 100, but you have paid only 80. So you've got a 20% relief. So that is one kind of relief that you get at the time of payment, at the time of giving the charity. Okay. Now, if this much is clear, Pooja, do you feel things are messy? You don't understand anything because this is your first class, or you're able to understand things? Just type it, I will continue. Meanwhile, there are three kinds of people. The first kind of people who are the basic rate taxpayers. That is the people who have an income of less than 37,700, the ones who pay 20% taxes. For those guys, for these people, the relief is when they make the payment as mentioned above. How much relief do they get? They get a 20% relief. But then comes the higher taxpayers, the ones who pay 40%. Higher taxpayers, the ones who make more than 37,700, they get two types of relief. Two types of relief. Again, Aditya, this is coming to answering your question. Right? They get two types of relief. The first relief is obviously is the relief that they get at the time of payment. They get a 20% relief. Pooja, are you there? I haven't heard back from you. All clear and comfortable? Kunal, clear so far? Sneha, Aditya, clear? Okay. So the higher taxpayers also, they will get the same relief when they are making the payment. They will also get a 20% relief. That guy also, when he's paying 80, when he wants to give when he wants to give 100 to the charity, he will only pay 80. But he will also get an additional relief. Additional. And that is the calculation that we will look at here in this section. Again, you don't need to look at the textbook. But what will you do? Let's look at, again, coming back, we will come back to that, but we will look at illustration 9. Brenda has employment income of 55,000. So see, she's crossed that 37,700 category, right? So Brenda has income of 55,000. She makes 3,600 to the charity under the gift aid scheme. So again, remember, the personal allowance she has is 12,570. No need of an adjustment to personal allowance for you. Again, Aditya, personal allowance, no adjustment is needed. This is answering your question. So even though she is making a donation, her income is less than 100,000. No need to make any adjustment to the personal allowance. Is your question doubt answered now? Now what happens? Her taxable income becomes obviously 55,000 minus 12,570, which is 42,430. Now what happens is, as usual, what will you do? 37,700 is the up to 37,000. Again, please don't look at the textbook. Until and unless I don't tell you to look at the textbook, don't. 37,700 is the up to 37,700. You will pay taxes of only 20%. So you are supposed to pay how much? 37,700. 20% of that is 7,540, and you're about to pay this. But at that time, what happens is the government comes and tells you, okay, no, I'll just I'll come back. Okay. 37,700. After that, how much is the excess? 42,430 minus 37,700. Please don't look at the textbook. 4730. You are supposed to pay 4730 and you're supposed to pay 40% of that, which is how much? 1,892. So your total tax liability is 7,540 plus 1,892 should be 9,432. Guys, this is our life basically. Again, don't look at the textbook. But here you are paying a tax of 9,430. But again, Aditya, look at this thing. What does the tax system do? The tax system say you are a nice man. You gave charity. So the tax system tells you that till date only 37,700 was taxed at 20%, correct? But now because you have made a donation, more of your income will fall in the lower category. More of your income will be taxed at 20%. So obviously, if more of your income is taxed at 20%, it's a relief for you. Instead of paying 40%, more of your income. What do I mean by more of your income? A part of this income also, which was actually supposed to be taxed at 40%, a part of it is moving to being taxed at 20%. So it is a 20% relief you're getting. Instead of paying 40%, you're paying only 20%. So it's like you're getting a discount. So
it's 11 o'clock.
That is the second way the system is trying to give you a relief. More of your income, that is part of this 47,000, 4,730 will now move to the category where they are now taxed at only 20% instead of 40%. So you're getting a 20% relief. But how to do that calculation is what I will teach you. But you understand how the government is trying to give you a relief? What is the common sense behind that? Because understanding is very, very important. All of you, Kunal and Chirag and Pooja, everybody understood how the government is trying to give you a relief? Yes. Now, what happens is this. We will now find out how much of this 4730 will move to the 20% category. So this entire calculation we will remove. Because a little more will go in that 20% category. Right? So what you do is you're normally at 20%. How much is normally taxed at 20%? 37,700. But now, because you've made a charity, more amount will be taxed at 20%. And how do you do that calculation is whatever is your donation, okay, you will basically take, again, the donation amount here is the 3,600 in this case. You will, a part of that, not even a part of that, you're basically taking 100 divided by 80. So 3,600 into 100 divided by 80 will be 4,500. So 4,500 will be the additional amount that will now be taxed at 20%. So what is happening? Again, as you can see, before, now again, so at 20%, now how much will be taxed? 37,700 plus 4,500, which is 42,200. So guys, before what was happening was 37,700 only was taxed at 20%. Look at my screen. Now you can look at the text. Before only 37,700 was taxed at 20%. But now, because you have made this donation, 42,200 will now be taxed at 20%. And that is how the government is giving you a relief. Right? So before, this is how much you would pay. So on the right hand side, you have what you would normally pay. But you see now, because of this donation, 42,200 is taxed at 20%. And how much is the excess, guys? See, I just want to go back to the calculation. 37,700, 42,400. How much is the excess? 4,000? Here? Is it 4,500? I don't think so. 37,700 from 42,400. I'm just trying to show you both the scenarios. Normally 4730 would be taxed at 40%. And normally you would pay how much? How much? 1892. So normally your tax liability would be 7540 plus 1892, which is 9432. That would be your normal tax liability. But now, as I mentioned, I already told you what is happening. Look at my screen. A part of this 4730 is moving to the tax rate of 20%. And how much is moving to that 37,000 to the category of 20%? We've done the calculation. 4,500 from that 4730 is moving to, see, 4,000, 4.5K is now moving to be taxed at 20%. Then obviously from 4730, if 4,500 is moving to being taxed at 20%, the balance amount, all of you look at the screen, from 4,730, if 4,500 has moved, only 230 will now be taxed at 40%. And 40% of 230 is 92. Because of this movement, the tax liability for Brenda has become 8532. Without giving charity, her tax liability would be 9432. So it's like, again, she has got what? She has got a relief. See, it's like you were supposed to pay 9432, but you get a discount on that, and now you pay only 8532. So Brenda gets a relief two times. The first time she gets a relief when, so this question of Brenda is clear to everybody. So the first time Brenda gets a relief is when she makes the charity, she makes the payment to the charity. She gets a 20% relief on that. But then they also get an additional relief later while computing the tax liability. Are you understanding? Clear? And how to calculate the increase in the, I mean, how did I calculate the increase in the basic rate charge? It is basically whatever charity you are giving, whatever donation you are making into 100 divided by 80. So if you remember this, by that much amount, the charity will move to the lower category. With which, if you have understood this, all of this that is there in the textbook will be crystal clear. That's it. So I hope you have understood illustration 9. Now I'm giving you, I have explained to you this paragraph here on page number 37. However, I am letting you kind of go through it and see if there is any problem anywhere. Okay. Let's go through it. And if obviously don't sit and look at anything you want to write, please make sure you do. Just moving away from the screen for a minute online. I'll just be back in 1 minute. Meanwhile, everybody else, please ensure offline, please make sure that you are reading it, you are comfortable with it. I have explained it to you. See if there's any problem. Is your life easy? With X? No problem. So now you understand what this textbook is trying to tell you. No problems at all. So, this for personal calculation, we have to use the gross amount. That is the amount multiplied by 100 by 80. Personal allowance. Reduction. We will come to that. Now, next question. Please just excuse me. Lose country. Normally, there is no problem in this. Suddenly, there is. Yeah. Okay, let's move on. So this part is over. Now we're going to look at test your understanding 6. Okay, so we've looked at what? We've looked at test your understanding 5. We've looked at charitable giving. We've looked at illustration 9. Now we're looking at test your understanding 6. Right? Twins Paul and Grace each have employment income of 54,345 a year. Grace makes a payment of 2,000 to charity under the gifted scheme. Calculate the income tax liability for both Paul and Grace. I think Paul is something that you can easily do because there's nothing new about Paul. Paul is just having 54,345. You deduct the personal allowance, get the taxable income, and at that rate you. So Paul is very easy. Paul is how? Paul, if we have to do, Paul is 54,345. Grace, oh sorry, personal allowance is 12,570. So taxable income is how much? 54,345 minus. No need to do it, guys. Just calculate numbers and tell me first. I want you to do it with me. You can write down later. 41,775. This is the taxable income. Now, after this, again, 37,700 will be taxed at 20%, which is 7,540. And what is the excess of 37,700? 4,075, which is taxed at 0.4, that is 40%. So how much is that? 1,630. Therefore, his total tax liability is 9,170. So Paul's life is very easy. Coming to Grace. Grace has an income of again the same 54,345. Okay. Personal allowance again is how much? 12,570. So his taxable income is 41,775. Right? After this, what happens is again, because Grace is making a payment of 2,000, there will be more that will be taxed at 20%. How much is the charity? How much more amount that will move to basic rate band, that is at 20%? 20% will be, I told you the formula. The donation made into 100 divided by 80. How much is it? 2,500. So 2,500 will move to the basic rate band. So in case of Grace, 37,700 plus 2,500. How much is it? 40,200 will be taxed at the lower rate of 20%, which is 8,400 and 8,040. And the balance amount, how much is the balance amount? Think about it. 40,200 has been taxed at the basic rate. So the balance will be 1,575. How come? Guys, you are telling me the calculations. So your calculations have to be right. From the 41,775, how much? 15, that's the answer you gave. 1575 will be taxed at 40%, which is 630. Therefore, her tax liability will be 8670. Am I right? So Paul's tax liability is 9,170. Grace's tax liability is 8670. This is test your understanding. 6. Nine one seven zero and 867. So again, even though they have the same income, just because Grace is giving charity, Grace is having a lower tax liability. So technically, the textbook is showing you all the ways you can bring down your tax liability. One way was to take a loan and pay interest for work related things. You can bring down your tax liability. So indirectly or directly, we are teaching, the textbook is teaching you how to legally bring down your, all of these are now, obviously the textbook will not mention all of these are ways to bring down your tax liability. But these are all, you yourself are able to see that you can bring down your tax liability by taking a loan and paying interest on that loan. You can bring down your tax liability by also what is this? Donations. Now coming to your question, Aditya, I think the next test your understanding is where the income is more than 100,000. There is where there will be an adjustment to the net income. Claire has a trading income of 156,000 and employment income of 12,000. So in Claire's case, what is happening? 156 plus 12 is 168. She does not have any savings income or dividend income, and she makes gift aid donations to a charity of 47. So in this case, what happens is, yes, there is no doubt that the personal allowance will be affected because we know that our income has crossed that threshold of 100. So this is where your question was, what happens if the income crosses 100,000, right? How will the personal allowance be affected when there is a donation made, correct? Is this precisely what you were asking for? So guys, again, this is again a sum that is kind of going to take me at least 5 minutes to solve. And it is 11:24, and strictly, believe it or not, but in our office group, Babu, what instruction you showed here? Break time. He did this. So strictly we have to follow. If we don't follow, we don't start at 10 a.m., I'll get a message in the group. If we don't end at 1 p.m., I'll get a message. If we don't give the break at 11:25, I'll get a message. If we don't give a test on Friday, I'll get a message. If we don't, so there are so many things that are part of our attempts to improvise the service that we give you. Again, this break is so that people know that exactly this time the break is. So any arrangements students need to make, anything you need to eat, anything you need to do, this is the time, right? Even the ones who are attending recorded sessions, they know 11:25 to 11:35 they have to skip, and sharp 11:35 they know we will start. So they can start exactly from 11:25. They can forward and start from 11:35. No need to sit and think, oh, Sometimes the faculty goes on break for 20 minutes. All that should not happen. So sharp 11:35, guys, we will continue. Online need not leave. Just stay in the meeting. Make sure that by 11:35 you're back in front of the screen. Thank you. Yes, guys. So it's 11:35. Let's continue. And online, just let me know that you're here, Kunal and Chirag. So we've looked at test your understanding 6, and we've looked at test your understanding. We're looking at test your understanding 7. What is test your understanding 7 about? Claire has a trading income of 156 and employment income of 12,000, which means Claire has an income of 168,000. She has made a donation of 47,000. Now, this is her income, and normally the personal allowance in this case, because her income is more than 100,000, we need to calculate the adjusted net income. And from that, reduce 50%. Right? So, here what happens is this, it's very simple that yes, the personal allowance is 12,570, but get the adjusted net income. And we've seen in an earlier chapter that donations will, what happens with donations for adjusted net income? It will be subtracted, right? So in this case, 168,000 Claire is making, from which again 47,000 was a charity that was paid. Are you understanding? 47,000 was a donation that was made to, where are that body? Charity. So what we will do is again 47,000 into 100 divided by 8. Okay, so and the same amount we will also use to move to the basic rate band. Remember, I told you how do you move an amount, the charity amount. Forget personal allowance also. Normally speaking, 37,700 will be taxed at 20%. Because she has given a charity of 47,000, 47,000 into 100 divided by 80, whatever is the figure. How much is the figure? 58,750. What will happen is now, even this 58,750 will be taxed at 20%. You know this. But this figure will also move in the adjusted net income calculation because a donation is made and this figure is deducted from where 168,000. So your gift aid donation, I'm just putting it as GAD. Your gift aid donation is how much? 58,750. So you deducted, how much is 168,000 minus 58,750? So your adjusted net income, again, the ones who are not there in the previous recording or the ones who are watching this recording without watching the previous recording, this was mentioned, correct, Aditya? We looked at the fact that whenever a donation is made, you will calculate the adjusted net income in order to get the personal allowance. So your adjusted net income is 16, how much? 109. And for personal allowance, again, the ones who haven't watched the previous recording and you're watching this recording, this is only the fourth class or third class, fourth class. This is only the fourth class, right? So 109, again, the excess over 100,000 is what will be subject to a 50% reduction. So again, how much is the excess over 100,000? 9,250. There will be a 50% reduction of that in the personal allowance. So 9,002. So your personal allowance will fall by 50% of 9,250, which is 4625. So your personal allowance will drop by this amount. Okay. Can I redo this calculation for you? Entirely step by step. Again, remember, for the ones who have not understood, Claire is making 168,000. And the first things first, personal allowance calculation needs to be done. Because Claire is making a donation, we will need to calculate the adjusted net income, right? Her income is 168,000, but her gifted donation was how much? Again, you need to calculate. How will you calculate her gifted donation? She's made a donation of 47,000 into 100 divided by 80 will be her what? Will be the amount by which she will get a relief. This amount of 58,750 has to be deducted from your income. 58,750 to get your adjusted net income of 109,250, after which it is as usual. Whatever is the excess over 100,000, personal allowance will drop by 50% of that amount. Excess over 100,000 is 9250. So personal allowance will drop by 4625. And normally the personal allowance is 12,570. So personal allowance normally is 12,570. So the adjusted personal allowance will be from 12,570, 4,625 will need to be deducted. So how much is it? 79. So your personal allowance now comes down to 7945. So we know what the personal allowance is, and we're going back and saying that the personal allowance is 7945. Therefore, the taxable income is how much? $160. Is this correct? 160,055. Now, out of this, again, guys, normally speaking, only 37,700 will be taxed at 20%. But because she's made a charity, you don't need to calculate, we've already calculated. Because she's made a charity of 47,000, 47,000 into 100 by 80. Sorry, yeah, 47,000 into 100 by 80. By that much amount, the tax at the lower rate will increase. So normally it will be 37,700 only that will be taxed at 20%. But now even 58,750 is taxed at 20%, which is a good news for you. Even 58,000, no, otherwise you would pay tax for 58,750 at 40%. But now you're paying tax of 58,750 at 20%. So how much is 37,700 plus 58,750? So 96,450 is taxed at 20%. Therefore, how much is the tax liability? 19,098. The remaining amount, again from 160.55, if 96,450 is taxed at 20%, how much is the remaining amount? something, 60 something. 63,605 will be taxed at 40%. So how much is it going to be? 55,442. Therefore, the tax liability will be how much? 730. Let's check. Test your understanding. 7. 44,730. We got this. 44,000. So Aditya, your doubt is clear now. So guys, one exercise I want you to do to realize the power of just making a donation. How much your tax goes down by. See, because the donation was made, your tax liability is 44,732. Can we just assume that this lady made no charity? For a second, we will assume that this lady made no charity. How much tax would she pay in that case? First of all, her entire personal allowance would, what would happen? Go. No personal allowance. So again, step by step, we're just assuming that she did not make a charity. So all of you look very carefully. 168,000 would be her income. She would have a personal allowance of how much? Aditya, in this case, zero. The personal allowance would be zero. So the taxable income would be completely the entire 168,000. Now, because she has not paid any donation, any charity, she will now pay 37,700 at 20%, which is how much? 7540. And up to 125,140. How much is the balance? 106. How much is up to 125,140? 87,440. Up to 125,000. How much is it? 125,140. So 87,440. You will pay at 40%. How much is it? 34,976. And then after that, so far we have taxed 37,700 plus 87,440. 125, 140 we have taxed. How much is the excess? 125, 140 is already taxed. So from 168, there is still how much remaining? 42,860 would be taxed at how much? 45%. How much would it be? 9287. Is this correct? Sorry, 19,287. So the tax liability would be how much? More than 50,000. How much? 61,800. So remember this. Without giving the charity, she would pay a tax, she would have a tax liability of 61,803. But because she has paid charity, she is paying a tax of 44,732. So she's got such a big tax relief. So not necessarily charity, is always just given when businesses are giving. You say this person has given so much charity, so much charity. Charity is also a means to bring down the tax liability. And of course, you get a good name. You get a good name also, and your tax liability also comes down. Right? So again, test your understanding. 7 is clear, Aditya, now. Now, child benefit tax charge we had already calculated in the earlier class, so I'm not going to do that. Now, this is the last topic of this specific chapter. if I'm not mistaken. Yes. Residency. What do I mean by residency and what is residency? See, when I speak of residency, I mean it's like when will you be counted as a UK resident? When will you be treated as a UK resident? If you go to UK for 2 weeks, will you be a UK resident? So will you pay taxes as per UK tax system? If you stay in UK for 6 months, then also no. 8 months. So basically, what this is telling you is in this section, we're going to look at when will you be treated as a UK resident and when will you not be treated as a UK resident. And that is what you're going to learn in this section. So this is talking about residence, tax status of an individual. Right. So in this case, what do we do? So first of all, this decides whether you should be taxed only on your UK income. Maybe you have income from other countries also, right? Maybe you are a UK resident living in UK. You have income in UK, but you also have income in India. You have income in UK, but you also have income in US. So we are looking at should we only tax you on your UK income or the income from the whole world? This is one important question that we are considering. Right? Are you understanding what this is? So, if you are a UK resident, you will pay taxes on everything you earn, even the income from other countries. So this is what I've just told. All persons resident in the UK for tax purposes are assessed to UK tax on their worldwide income. Right? So UK resident to pay taxes on everything. But if you are a non-UK resident, then you will pay tax only for your UK income. Are we understanding this? The important part here is whether you are a UK resident or not, because it really makes a very big difference. If you are a UK resident, then you will pay taxes for all your incomes. And if you're not a UK resident, then you will pay taxes only for income from UK. So what you might do is live in the UK, plan your living in the UK in such a way that maybe if you have income from across the world, maybe you have a very high income from Singapore, you have a very high income from Dubai, you have a very high income from Australia, then and you are from UK, then you might kind of choose to live in UK only for so many days where you are not qualified as UK resident. Are you understanding? Because the minute you qualify for UK resident, then you will be taxed for all the income. So now in this section, we're going to look at when will you be treated as a UK resident and when will you not be treated as a UK resident. Again, there is a 3-step process to it. first and easiest way to decide whether you are a UK resident is to look at, I mean, it sounds a little silly to say, but deciding whether you are a UK resident or not, first step is to see if you are not a UK resident. When will you automatically not be counted as UK resident? When will you automatically not be counted as UK resident? When do you think you will not be counted as UK resident? If you were in the UK for less than 16 days in a tax year. You have to be in the UK for less than 16 days in the tax year. Or maybe you are you were in the UK for, suppose, say for example, you were a non-resident of UK. See, sometimes you are a person who was maybe last year a resident of UK, but maybe last year you were a resident. Okay, but this year you are there in the UK for only 16 days, in which case, less than 16 days, in which case you will not be treated as a resident. But suppose in the past 3 years you were a resident. Maybe last year you were a resident, or last to last year you were a resident. If you were a resident of UK in the past 3 years, then the number of days increases because just recently you were a UK resident, right? Sorry, I will remove this. You were in the UK for less than 16 days in a year, then you will be a non-UK resident. But if you were a resident of UK in the past 3 years, then the number of days that you need to be in UK to be qualified as a UK resident is 46 days. Are you understanding? So if you were a resident of the UK in the past 3 years, and this year, and in this tax year, stayed for less than 46 days, then also you will be a non-UK resident. So that is what this is saying. So 16 days normally, if you are living in the UK for less than 16 days, you will be non-UK resident. Or again, you are in the UK, again, you have 46 days, sorry. You have not been a UK resident in any of the past 3 years. So in any of the past 3 years, if you were not a UK resident, then you will not be a UK resident if you are staying in the UK for less than 46 days. Okay, so 46 days if you were not a resident of the UK in the past 3 years. And then 91 days, less than 91 days, where you work full time in another country. Right? So, number one, you were in the UK for less than 16 days. You were in the UK for less than 46 days, and you were not a resident. Sorry, this is supposed to be you are not a resident. Guys, please make sure you are listening carefully. Second point is you are not a resident of UK for the past 3 years, right? You were in the UK for less than 46 days and you were not resident for the last 3 years. And you will also not be a non-resident of UK if you were in the UK less than 91 days and you have a full-time job abroad. So if you are somebody who has a full-time job, even outside, maybe you have a full-time job in Singapore.
It's 12 o'clock.
Because you have a full-time employment in Singapore, even if you stay for 80 days in the UK, even if you stay for 90 days in the UK, you will not be treated as a UK resident because you have a full-time employment in another country. So just make a read of this and let me know if there's any problem. Remember again, if you have an employment with another country, full-time employment in another country, then what will happen? Even if you stay in the UK for 80 days, 90 days, 91 days, you will not be a UK resident. So, guys, the first thing, again, I'm going to repeat myself, unfortunately. UK tax is, again, probably Sneha has sent me the document on the Word document. I didn't check it. Let me just see. Once I check it and everything is okay, I will have it shared in the group. Sorry? In the group? Okay, let me check it. And then once it's okay, I'll ask you to go through it. Okay, now Aditya, you can take the lead on this. For your, like, what I want you to do is make a note of a couple of things that we saw today. One is like a Word document, like a PDF. Word document is good for now because once I'll be able to make edits to it and send it as a PDF. So that last minute you will be able to, there will be a lot of things that you will have something to revise, like documents to revise. So it's made by students for students. Okay. So one thing you can make a note of in your Word document today is on the this rule which I told you. Normally you'll get a 20% basically relief for everybody, whoever is making a charity at the time of payment. So at the time of payment, 20%, this is for all taxpayers. Then the second relief is for the ones who are paying the higher and additional rates. So I want you to make a note of that in the Word document, along with these things. When will you be treated as a UK resident? Obviously, as of now, I've just looked at when will you not be a UK resident. So, number one, you have to be in the UK for less than 16 years, sorry, 16 days, or you are in the UK for less than 46 days, and in the past 3 years, you were not a UK resident. See, last year, for example, you were a UK resident. Suppose last year you were a UK resident. Means what? If last year you were a UK resident, then to get the residency status is easier this year. To get, you can even word it this way. If last year you were a UK resident, to get the residency status is easier. You just have to stay in UK for 17 days. You just have to stay in UK for more than 16 days. But if for the last 3 years also you were not a resident, last year also we don't know you, last year also we didn't see you, before that also we didn't see you. In that case, to qualify as a UK resident, you need to stay in the UK for longer because you don't have any relationship with UK in the past 3 years at all. So, suppose you have had no residency status in the past 3 years, then to be qualified as a UK resident, you have to stay in the UK for more than 46 days. But if you have a full-time job in another country, why is this not coming like this? If you have a full-time job in another country, then even if you stay for 46 days in UK, even if you stay for 47 days, 50 days, 60 days, 70 days, 90 days, you are still part of the workforce of another country and you're full-time working there. So if you have a full-time job in another country, you will only qualify, basically you will not be a UK resident unless you stay for more than 91 days. Unless you stay for more than 91 days in the UK. Tax. This is different than the citizenship of UK. Yes, obviously. So just go and stay for 92 days in India, you have to pay tax in UK. So, but again, this is non-residency test. We will also look at certain criteria. Again, probably these words are a little misleading, but I've put this so you understand the non-UK residency. When will you not be a UK resident? The reason I've used these words is to understand why 46 days if you were not a resident in the UK for the past 3 years. If you were not a resident in the UK for past 3 years, obviously you have to stay more. Within 60 days, you'll not 16 days, you'll not be counted as a resident. So the reason I've put this is so you understand this. So now look at this and tell me if your understanding for this is clear and if you have made a note. Can you, Aditya, make a note of this in the Word document and share? So far you're making a Word document on 80% donations and that higher tax rates get and also this one. Okay, so that is done. So who would not be qualified as a UK resident? We have C in my index. Not UK resident test, automatic non-UK resident test. Automatic non-UK resident test. Now, when will you automatically become a UK resident? Automatic UK resident test. For example, you have a full-time job in the UK, then obviously you will become automatically a UK resident. So automatic UK resident status you get if you work full-time in the UK. You will automatically become a UK resident. Or your only home is in the UK. Obviously, then you are living in the UK. If your only home is in the UK and you use it, meaning you're living there. So obviously, where you will live in your home now, or you were in the UK 183 days or more. So if you pass the non-UK resident test, you automatically become a non-resident. If you pass the UK resident test, you automatically become a resident, right? So when do you not become a UK? When are you not a UK resident? If you've stayed in UK for less than 16 days, or you've stayed in UK for less than 46 days and have not been a UK resident in the past 3 years, or you have stayed in the UK for less than 91 days and have a full-time employment somewhere else, you automatically, if you fit in any of these three criteria, you are a not UK resident. When will you classify as a UK resident? When either you have a full-time employment in the UK, or you have your only house in the UK, or you are in the UK for more than 183 days in a tax year. Then, if you fall in this category, you will automatically fall in the category of UK resident. Okay, so we've looked at when will you not be a UK resident and when will you be a UK resident. So this is very easy basically. When are you not a UK resident? When are you a UK resident? So step one is to check if you are not a UK resident. If any, so basically you're checking, was I there in the UK for less than 16 days? This. If any of this is met, you are a not UK resident. If any of that test is met, you are not a UK resident. If I was there in the UK for less than 16 days, you're not a UK resident. If I have been in the UK for less than 46 days and I do not have residency in the past 3 years, automatically not resident. If you have a full-time job elsewhere and you're there in the UK for less than 91 days also, you are automatically not resident. So say for example, a lady working in Dubai goes and visits her daughter in London and stays with her daughter. The daughter is on, say, maternity leave, and the mother goes and stays with the daughter. And she's staying in the UK for 90 days, 3 months. Because this lady works in Dubai, actually, she will not be qualified as a UK resident because she has a full time job in Dubai. Are you understanding? So, this is the not UK resident test. Next is when will you automatically become a UK resident? If you are having a full time job in the UK, you are a UK resident. Automatic. Or if you, what's the other point? If you have or you have a home in the UK, your only home and you live there. Or you've stayed in the UK for more than 183 days in a tax year, then also you will, obviously you're living there literally. So 183 days is 6 months, half a year. So automatically you will become a UK resident. Right? But now there is certain criteria. Maybe you don't fall in the first category or you don't fall in the second category. Say, for example, you were in the UK for 80 days, but you don't have a full-time job somewhere else. But you don't have a full-time job in UK also. For example, and this can happen. You're somebody who doesn't have an employment anywhere. You're there for like 80 days. You don't have an employment. You don't have employment in UK. You don't have employment elsewhere. Okay. And you have stayed in the UK for, say, how many days? 70 days. 70 days you were in the UK. So obviously, look here. In this case and in this category, you don't fulfill this criteria because you were there in, because if you were less than 16 days, you were not resident. But you stayed for 70 days. You don't fall in this criteria also. Because obviously you've stayed for 70 days. Now, it doesn't matter if last year you were a resident or not. 70 days, you've crossed that 46 days. And 70 days you've stayed. But it's not like you have an employment somewhere else. You don't. So you don't fulfill any of this criteria. So we will check if you fulfill this criteria. You did not stay in the UK for 183 days. And you don't have a house in the UK. Maybe you were staying with somebody for a couple of days. And you don't have a job in the UK. So neither do you fall in the category of non-UK resident test, nor are you ticking any box in the UK resident test. This is where step 3 is required, where is he earning money? We might want to check that. So in that category, for these people who don't fit any of the above two steps or don't tick any boxes in the first two steps, they are in the gray area. Gray area means neither are they black nor are they white. Black is this side, white is that side. When you are in between, you are in the gray area. Right? So for these people, step 3 is needed. The third step, where we look at further things. Oh, do they have a close family member in the UK? Those kind of things we will check. Right? So automatic non-UK residency test is clear. Automatic UK residency test is clear. If the individual does not satisfy any of the automatic tests, his, her, or their residence status is determined by how many of the 5 sufficient ties tests are satisfied and how many days are spent in the UK. So, to determine whether or not the individual is sufficiently connected to the UK, to be considered UK resident, HMRC look at the following 5 types. If you have a close family member, say a spouse or a child in the UK, then again it means you have a close tie with the UK. Again, we're talking about a close immediate family member. But again, there could be a possibility that you're staying with a distant aunt and you don't have a close family member, right? Has a house in the UK which is made use of during the tax year. Again, you have a house there in the UK and you stayed there. In that case, also it means you have a close tie, close connection. Tie means what? Connection. But again, you are staying with the distant aunt, so you don't have a house. Right? Work does, now this answers your question. Does this person do a decent, reasonable amount of work in the UK? May not have a full-time job, but is doing reasonable amount of work in the UK. Now that work could be any work, but they are spending a decent amount of time doing something productive in the UK. Would mean that they have a connection, close connection. Next is days in the UK has spent more than 90 days in the UK in either or both of the previous two tax years. Right? You've spent more than 90 days, meaning 3 months more than 3 months you've stayed. So even if you don't have a job abroad, you have a close tie connection with the UK. And this person spends more time in the UK than anywhere else, than any other country, meaning that this person is very well connected to the UK. Right? So just make a note of these ties. Kunal and Chirag, is this clear? Now, guys, what we will look at is something very simple. Now, what we're seeing is this. Basically, there are two categories of people. There are two categories of people. You want me to switch off the AC? There are two categories of people. Those who haven't lived in the UK in the past 3 years, and those who have lived in the UK in the past 3 years. Okay. For those who have lived in the UK in the past 3 years, we will check all 5 ties. We have to check all 5 ties. And those who haven't lived in the UK, we only check the first 4 ties. Okay, now what happens is this. We are looking at if you spent 91 to 120 days in the UK, you need at least 2 ties to be a UK resident. Maybe you need to have a close family member or a house, or maybe you need to have a close family member plus a substantial amount of work in the UK. So if you're spending 91 to 120 days in the UK, you need at least 2 ties. But if you're spending 121 to say how many? What was the number of days? 183. Remember, if you spend more than 183 days, you fall in the UK category. But if you spend, say, 151 to 182 days in the UK, then even one tie can make you a UK resident. 151. Okay, I'll talk about 121. I'll just show you that for now. But for now, just write 151 to 182 days. So you see, you have this less than 16 days, automatically not a resident. 16 to 45 days, again, resident if 4 UK ties or more. So basically, there's a table that looks at how many days you were in the UK and how many ties that you have. You can put this table there, right? Again, 151, 182. Again, what is important is the previous, whether you were a previous resident or not a previous resident. In both categories, if you are less than in the UK for less than 16 days, you are not a resident if you were not a previous resident, and automatically not a resident if you were, whether you were a resident or not previously, if you've spent less than 16 days in the UK, you automatically become not resident. So this, you can put it in the form of this table like how I have, and make a note, because this is something that will help you determine whether somebody is a UK or not. So this table will always help you. As of now, let's not worry about what is given in the exam, what is not given in the exam. Just know that this table will help you. I will later, once you are comfortable with everything, tell you that this is needed. We will be there in the exam. Will be given to you in the exam. With which this chapter is over. Automatically are not resident if you were in the UK for less than 16 days or less than 46 days and not have been a UK resident. This we've seen. See if there's a problem with any of this. Then when will you be a UK resident automatically? If you work full time in the UK, or if you've been in the UK for more than 183 days, or your only home is in the UK. Third is if you don't pass the first test or the second test, there is some test to see what kind of connections you have in the UK or with the UK. These are some of the connections that you can possibly have. Either you can have a close family, or you have a house that you use in the UK, or you do a reasonable amount of work. Right? These are a few connections that you can possibly have with the UK. Now we will look at the days spent along with connection. Right? If you have spent, say, up to 182 days, again, yes, 120 to 182 days if you have spent, then even having one of these connections can make you a UK resident. See tax tables in exam. Basically this one. Again, I'll not tell you what is there in the exam. I just want you to be comfortable with these things. But this is the table which I am referring to at least right now. Okay. If you've been in the UK for 121 to 182 days, then even one tie or connection is enough to make you a UK resident, especially if you were a previous resident. Right? So based on the days and the number of connections that you have, we will determine whether you are a UK resident or not a UK resident. Right? So with which this chapter, which was a fairly very big chapter, is over. Right? So basically, what all did we look at in this chapter? If I have to quickly walk through it, tax year is the period of time for which you are liable for taxes, which is generally from the 6th of April to the 5th of April. 6th of April of 2023 to 5th of April of 2024. Personal allowance is any amount that you get which is for you to keep. The government will not charge a tax on that, right? Just a few important things I'm going to highlight. Again, how much is the personal allowance? This is very important for all the calculations throughout this chapter. If you don't know this, you'll not be able to do any calculations. So the personal allowance amount is 12,570, meaning that whatever you earn up to 12,570 is not taxable. It is for you to keep, it is tax. Again, I'm just highlighting those things that are very, very important. Without knowing this, you cannot do any of the sums in this chapter. Okay, then what happens when you cross 100,000? Whenever you cross an income of 100,000, then the personal allowance will drop by 50% of the excess of 100,000. So, for example, if your adjusted net income is 108,000, the excess of 100,000 is 8,000. So, your personal allowance will fall by 50% of 8,000, which is 4,000. So, from 12,570, it will become 8,570. Right? And again, how do you calculate the adjusted net income? We did that even today. Basically, from the net income, you deduct any donations and all that to get the adjusted net income. We did that even in Test Your Understanding 7 today. Right? Your question, which you had asked. So this is very, very important because not only is it coming in the sums now immediately, but also in later sums like Test Your Understanding 7. Illustration 1, again, you can see income is 110,000 and she is making donations of 4,000. So what happens? Her personal allowance will automatically go down because her income is more than 110,000. How do you get the adjusted net income? From the net income, you deduct the gift aid donation to get the adjusted net income. So her adjusted net income is 106,000. The excess over 100,000 is 6,000. 50% of that will be reduced in the personal allowance. So personal allowance will fall by 3,000. So the adjusted personal allowance will be 12,570 minus 3,000, which is 9,570. We've done this today in Test Your Understanding 7. Again, the tax rates 20, 40, 45. Up to 37,700, you will be taxed at 20%. Anything above 37,700 up to 125,140, you will be taxed at 40%. And anything above that, if you're earning, you will be taxed at 45%. So you need those numbers in order to be able to calculate the sums that are coming further. That's why whatever highlights I'm taking basically from this chapter. Okay, Tala I even did today before starting the class. I'm not doing that. Again, Thomas has an income of a total income of 168,680. His personal allowance, even if you do the calculation, you can check it. But if you bring down The excess is 68,680 and 50% of that is 34,340, which is more than the personal allowance. Personal allowance gone, no personal allowance. So taxable income is 168,680, of which 37,700 will be taxed at 20% and so on. So the tax liability is 62,109. Okay. What is income tax payable? This is basically pay as you earn, where your employer deducts the tax liability for you and pays it on your behalf, right? And because of this, again, when you show the computation, you will show the total liability, but from that you will separately show that pay as you earn has been deducted, and the remaining amount will be the payable amount. Right, I just did illustration 7 even today, even though I had done this last class. I did illustration 7, I solved it today also. Last class we had looked at income tax payable and I did illustration 7 today. Illustration 7, chapter 2. If you want, I can walk you through that again. He has an income of a total income of 54,120. Because his income is less than 100,000, the entire personal allowance of 12,570 can be deducted. So the taxable income is 41,550, right? Up to 37,700, he'll be taxed at 20%, which is 7,540. And anything above that, he will be taxed at 40%, which is 1,540. So his tax liability is 9,080. But from that, we know that his pay as you earn was already deducted for $80. So 80 will be deducted from this liability, and the payable is only the remaining 9,000. Today we looked at Riley. Did we see Riley? No. Test your understanding 4. I will leave you to do as. Okay, I think I do it. Riley provides you with the following information: trading income, salary. So basically, the total income is 23,000 plus 28,400. How much is Riley's total income? Quickly do the calculation. 51,400, right? So again, his income is less than 100,000. So he will have a personal allowance of 12,570 because he's also not making any donations or anything of that sort. So there'll be no adjustment. Personal allowance is 12,570. So his taxable income is how much? 38. Did I do this sum? No, right? 38,830 is his taxable income. So up to 37,700, he will be taxed at 20%, which is 7,540. And anything in excess of that, how much is the excess? 1130 will be taxed at 40%. 40% of 1130 is 452. Therefore, his total tax liability is 7,992, correct? 7,992. Now, from this 7,992, pay deducted was 3,310. Therefore, the tax payable, already 3,310 was deducted. So the tax payable will be how much? 4,682. That's it. So test your understanding. 4 is the answer, 4,682. 4,682. Okay, because this is a very fairly big chapter. These are your basics, fundamentals. If this is not clear, then tax will be very problematic. Then what did we look at? We looked at reliefs. Reliefs are basically certain amounts that you can deduct from your total income, right? The government is basically comforting you. This relief you can get when you're giving charity, when you are borrowing from the bank and paying interest. But remember that has to qualify. And when will it qualify? If it is for work related purposes, when the loan is for work. So qualifying interest payment is basically when you pay interest on a loan. When will it qualify? It will qualify when it is for work purposes. Otherwise, you will not get any relief on that. But if you have taken a loan for work purposes and you're paying interest for that, then you will get a relief. And we've looked at illustration 8 about how both Anwar and Mila are making the same salary, they have the same income, both are paying the same interest, but their tax liabilities are different because Mila got a relief. We did this sum today, illustration 8. Okay. You see this? Even though their income is the same, even though their interest payable is the same, their tax liabilities are different because Mila got a relief. Why did Mila get a relief? Because Mila had a qualifying interest payment, and qualifying interest payment will give you some kind of a relief. Okay. Then we also looked at test your understanding 5 Emmanuel. Charitable giving, I told you again, government encourages charitable activities by giving you relief there as well. And I told you, first relief is a relief which everybody gets. 20% relief everyone gets when they make a charity, when they make the payment. But the higher rate and additional rate taxpayers, they also get a relief while paying taxes, right? And again, today Aditya will make a small note of that and share it with me. We looked at illustration 9 as well. And test your understanding 7 was like a big sum which we spent time on, right? Test your understanding 7 is where there is a gifted donation, so that will affect the personal allowance also. And also, it will, as usual, give a relief to Claire. Okay. Child benefit tax we saw in the earlier class. And then finally, we looked at tax status of an individual. First is easiest. When are you not a UK resident? If you stayed in UK for less than 16 days, or if you stayed in UK for less than 46 days and have not been a UK resident in the past 3 years, or what is the third one? Third category, less than 16, less than 91 days, and you have been employed full time in another country, you automatically fall in the category of non-UK resident. This is what I just mentioned. Chirag, is this clear? When will you automatically fall in the category of a UK resident? Number one, when you have a full-time job in the UK. Number two, when you've stayed in the UK for more than 183 days. Or what is the second one which I'm missing? You have a home in the UK. Right? If you don't fall in either of these two categories, you are the one who is in the gray area, where we will look at the number of days and the number of ties based on this table. We will decide based on this. If you don't fit in the first category and if you don't fit in the second category, we will decide based on. Let's look at test your understanding 9 and close the day. Right? What does test your understanding 9 say? Dieter was born in Germany and he lived in his hometown in Germany until the tax year 23-24. Okay. When he came to the UK to visit on 10th June until 18th Jan. So he has stayed in the UK for how many days? 10th June to 18th Jan. June, July, August, September, October, November, December. He stayed for more than 6 months. more than 183 days, Dieter has stayed in the UK. More than 183 days. So automatically he falls in which category? UK resident category. Automatic. Simon was born in France. She has lived in her hometown in France until the tax year 2023-24 when she came to the UK to visit for 1 month. So she is staying in the UK for less than 46 days and has not been a UK resident for the past 3 years. So automatically she is not a UK resident. So Simon will not be a UK resident. So automatic test, Simon has stayed in UK for only 1 month and has not been a resident for the past 3 years. So she ticks the not UK resident test. So she passes the non-UK resident test. Next, who is it? Fred has always spent more than 300. Now Fred is going to be probably somebody we have to figure out. Has already, now again, he's always been in the UK for more than 300 days in the UK and has therefore been UK resident. So he has been a UK resident. He gave up work on 5th of April 2023. On 18th May, he set off on a round the world holiday. Okay, so he went on a world trip. He did not return to the UK until 6th of April 2025. Initially, he spent 5 weeks in his second home in Portugal, but then did not spend more than 10 days in any other country while he was away. While he was away, he kept in touch with his wife and young children who remained in the family home in UK. So there are sufficient. So again, you see, now this year, in this tax year, on 5th of April, he went. Okay. So he went abroad and he just left and he did not come back until the next year. Right? He didn't come back until 6th of April. So what is the problem with Fred? How many days did Fred spend in the tax year in the UK? 43. How did you calculate 43 days? 18th May. 18 days in May and how many days in April? 25 plus 18 is how much? 18. On 18th May, he left. So he was in the UK until 17th May. So 25 plus 17 is 42. So he was in the UK for 42 days. Right? So again, what you have to do is he cannot be in the category of not UK resident. Why? Because see the category of not UK resident. 16 days. And it is 46 days, but he should not have been a resident of the UK for the past 3 years. But he was a resident of the UK. So he doesn't fit the second criteria also. So he does not qualify as a UK resident. So it's not like he becomes a non-resident. So he doesn't fall in the category of non-resident already. Right? So again, if you look at test your understanding 9, he has spent too many days in the UK. That is 42 days in the UK to be classified as not resident. You cannot put him in the not resident category. Are you understanding? So he does not fall in the category of not resident. And he is not automatically resident also, as he has not been in the country for sufficient number of days and has an overseas home in Portugal and has not had a full-time job in the UK because he gave up his job. So he does not fall in the category of not resident, and he does not fall in the category of resident also. So, first of all, he then falls in the category of a past UK resident who have lived in the UK for the past 3 years. We have to see if he checks and ticks 4 ties. He already has one tie, I know that. He has family. He has a home. He ticks 2 ties, I know that for sure. I remember it from the question. He was in the UK for between 16 and 45 days and must therefore at least tick 4 of the UK ties test. Right? As per the table, he was a resident of the UK. Look here. This is what you will look at. He was a resident of the UK. See, this is what this thing. 4 UK ties he must fulfill. I know as a matter of fact that he has a family in UK, he has wife and children. I know as a matter of fact that he has a house in the UK. So the second test is also met. Okay. Days in the UK, spent more than 90 days in UK in both of the previous 2 tax years. Okay. See here, you've spent in the previous 2 tax years, you've spent more than 90 days, and country time spent more time in UK than any other country. So he does tick the 4 checks of 4 connections he has, and therefore he will be classified as a UKS. Olga, I want you to try on your own. So with that, guys, again, the last 10 minutes, I've extended the class by about 2 minutes. But with that, we're done for the day. Just go through everything you see on the screen. This is for 27th of March 2025. And let me know how much is your understanding out of 5. Again, you can go through your notes, you can check everything you've written one by one, step by step. Please again, how much understanding 5 out of 5. Sneha, everything good, comfortable. How is that? Easy. I thought you FM. Easier than FM or harder? How easy? Easier than FM. Yeah. Till now. You, what do you feel? Easier than FM so far. Very good. Okay. Fine. All right, guys. You can leave. Thank you so much.